Dell is calling activist investor Carl Icahn's offer for the struggling computer maker unrealistic. A special committee of the Dell board found a nearly $4 billion funding gap in Icahn's takeover plan, meaning he doesn't have the cash to pay the $12 per share dividend he proposed in conjunction with Southeastern Asset Management. Our editor-at-large, Cory Johnson, is here to explain what exactly is going on here. Cory?
Well, let's see. Dell's board is trying to gain support before shareholder vote that's going to take place shortly. Of course, Michael Dell and Silver Lake Management on July 18th, they expect to put that matter before the shareholders for a vote. And the deal requires the approval of a majority of shareholders to do it. So we're in the depths of this battle right now. Jeffrey McCracken leads a team of reporters covering deals and M&A for Bloomberg News in New York, joins me right now. Jeffrey, is this about the special committee trying to help everyone, or is this about the special committee taking the side of CEO Michael Dell?
Well, at the end of the day, they are coming out on the side of Michael. What they're saying is, in essence, the proposal from Carl Icahn and Southeastern had two parts to it. First, there was a dividend, a very large dividend of up to $12 a share. And then second, the people who took that dividend and kept their shares would be diluted way down. So you'd get your $12, and then you'd have shares after that that were diluted and might only be worth somewhere in the neighborhood of, anywhere from $1 to $5. And what the special committee is saying is, Carl's got a bunch of unrealistic projections. He overstates the amount of cash that the business is going to create, and he understates, namely, the amount of cash the business is going to need going forward. So in the end, they did come out on Michael Dell's side, and that probably doesn't surprise anyone in the marketplace, but they do try to walk the investing community and the media community through how they came to this conclusion.
Well, let's unpack that maybe into sort of two separate bundles.
Sure.
I want to get to the stock stuff because that's, I think, is somewhat more confusing. But very specifically, Carl Icahn has some assumptions about the performance of the business and how much cash is required to run that business, both of which are far south of what the special committee's come up with.
Right. So I think it's in the neighborhood of $500 million. The $500 million is a number in terms of the amount of cash he expects will be generated that's above and beyond what the committee actually says will be generated. So he's got a number that's higher than what the people running the company think. And then secondly, he comes up with a number in terms of how much cash is going to be needed to run the business going forward that's way below what Michael Dell and the special committee thinks. I think he's low there by about $1.7 billion. Then you tack on some, he doesn't account for the termination fee, which is roughly $300 million, and he doesn't account for some debt maturing, and that's where they come up with this roughly $4 billion shortfall that they say Icahn has.
And then really quickly on the stock part of things, I mean, the shareholders are being asked under Icahn's proposal to make choices. The special committee is making assumptions about how many people and who will make those choices about whether they want to keep a stub or whether they want some cash. Right.
They get into that. What they don't get into, Cory, which I think is interesting, is the question of who's going to run Dell. Do you trust as a shareholder the people that will run Dell under Carl Icahn and under Southeastern? Because presumably, Michael Dell's going to be gone in the Icahn proposal. They don't get into that, which I thought was interesting. I thought they might weigh a bit into advising shareholders, listen, we're not quite certain of the strategy that would exist for Dell going forward without a Michael Dell or his leadership to run the business.
Right. Well, sticking to the hard numbers, an interesting approach.